This is Andrew Stotson. We're talking about careers in finance. And today we are talking with Meili Lovanich. Meili, can you introduce yourself and tell us what you're doing?
Hi everyone, I'm Meili. I'm in Bangkok, Thailand, and I'm currently a venture investor for PTT. PTT is an integrated oil and gas company in Thailand, and what we are doing is we are trying to find new S-curve businesses outside of the oil and gas industry. So we set up our team to invest in early stage and growth technology companies. So I myself, I invest in startup companies and also venture capital funds that invest in those companies. And then I've been doing this for almost 4 years. Within these 4 years, PTT also sent me to Silicon Valley, to Menlo Park, to work with a fund called G2BP. It is a spun out fund from the Kleiner Perkins Green Growth Fund. They invest in companies that you might know of, like Uber, DJI. So that's what I'm doing. So investing in like alternative asset class in startup companies.
Interesting. And you said something right at the beginning, something about S-curve. What is S-curve? What does that mean?
Usually when like businesses have like one S-curve, usually it kind of goes away. You have the good, and then like it kind of expired, and then you need to have like new S-curve in order to continue the growth of the company. Like for example, for PTT, if people stop using oil and gas, if the cars become electric, then the demand for oil and gas will reduce, and so we need to find basically a new revenue stream for the company.
And it's a kind of new thing. I mean, like I remember, I don't know, 10, 20 years ago, companies weren't buying, they weren't investing in startups. Why do big companies nowadays invest in startups and, venture capital type of things?
Yeah, that's right. That's because in the past, I mean, right now it's very cheap for someone to start a companies, and then because of the technology, it helps like a very small group of people to create a product that can actually compete with very, very big companies. And then because of this pace of development, even though you're a big company, you have like a big R&D team, which in the past it was like something very strong, right? But right now, you can't just compete fast enough. If like say from oil and gas to electric, PTT will not be able to hire like 1,000 of people in electric car industry. So what this is like the fastest way and the most cost efficient way to get into a new business like this.
It's it's such an interesting development, because if you go back 100 years, like my dad worked for DuPont, and all of the R&D is 100% all those years internal and all that. And they never really looked, I mean, they did look at acquiring companies, but the whole idea in starting, investing in venture and startups is so new. But what I'd like to do now is kind of go back to the beginning when you chose to to get into this, what you studied, kind of how your path went as you were kind of exploring the future. Because I know you didn't plan on being where you are, because we always end up places that we never thought we would be.
No,
or did you?
No, I didn't. But my first venture capital book that I have it actually right now. I said my first VC book is actually since 2012.
Okay.
But when I was in undergrad, I didn't plan. You're right. So like, but I studied at Assumption University in Thailand, and I studied finance and banking in major investment major. But then definitely we didn't study about evaluating startup company. There was just like public stocks.
Very simple stuff.
Yeah, and then after my undergrad years, I worked at Accenture in management consulting for 1 year, and then I applied to PTT in it's like a scholarship program that like you apply to get a scholarship to go to take an MBA program. And then I was at PTT for 2 years, and then went to Harvard to get my MBA. And then there, because at the time I did my MBA from 2014 to 2016, and then I got to, at the time the startup ecosystem was booming, venture capital, private equity, and when I got back from the US to Thailand, um, it was so weird that like companies so big like PTT did not have like a VC team.
Mm,
We could not invest in startup companies, even though like the technology was developing very fast. And so I proposed to the management and then to the board to set up this team. We
right.
got the first initial capital of 45 million US dollars to invest in startup companies and funds. And then because like within Thailand, we had we had like really few, if any, like a real VC professional that invest in companies like this
Mm,
systematically.
mm.
Um, and so we sent four team members, myself included, to SecCon and then to go invest in funds in the US and in the UK. And then
And when
we come back.
you say invest, you mean that you invested some of the money that you had allocated into venture funds that were experienced in this, so that you could learn
Yeah,
from that and go and experience that? Is that what you
right.
mean?
There are, yes, there are two type of investment that we do. One is a direct investment
Mhm,
directly into startup companies,
mhm.
and the other one is invest in venture capital funds. And then when we invest in venture capital funds, we also ask that we can send some of our staff to go and learn to intern
Mhm.
within that investment team.
Right.
Yeah.
And how was that? I mean, what did you learn from that experience?
I think in Silicon Valley they are very very educated, very systematic
Mm,
when they invest. Like when they get in, they would know the required return that they want. They see some like um revenue in the past 2-3 years, and then they project it reasonably, and
mhm.
then they look at the comps at like how they can exit the investment.
Okay.
And then so it's kind of difficult right now because like when you get international investors like SoftBank and other international investor coming in, and then just like give very very high valuation, it's kind of difficult to get like a reasonable required return. And then when I came back, I see this problem in Thailand. Like
Mm,
you like companies think they are startup companies, they have growth and then they have like technology, but then they don't like reasonably look at like how really can they cut costs, can they scale, and how they're gonna exit either IPO or M&A.
one thing that's really interesting that I see a lot, because I mean, I judge a lot of case competitions, and people are presenting their startups.
Yeah.
And what I see is that you have such a home country bias everywhere in the US, in
Oh
Thailand.
yeah.
But the
Yeah.
thing is that the US is such a massive and developed market that if only you develop something that would work in the US, it's good enough, probably, for. But when you talk about a startup in Thailand, the first
Yeah.
question I always ask is like, okay, what market are you in besides Thailand? Because if you're just building it around Thailand, it's hard to scale, not only from a customer perspective, but just being able to offset the cost of development of your product. So that's interesting that you're talking about that. And I just wonder, whether you look at Thailand, you look at Philippines, you look at Indonesia, you look at many of these
Yeah.
countries, they do have a lot of great ideas. What advice
Yeah.
would you give to, let's say that I, the person listening to this
Mm.
has their little startup and they do have potential. What advice would you give in relation to that?
In relation to the market, so if you're in a country that we call it TAM,
Hmm.
um, before we make any investment, like definitely right after the first call, we'll think about the total addressable market size.
Hmm.
So if you are not from the US, China, India, and
Hmm.
right now Indonesia, which
Right.
is like big in itself, you would have to think about like how, you have to think in a global scale from day one. If not, say like if you're ride sharing and then it sounds big, but then like if you say, oh, I'm gonna just focus in Thailand, and then
Hmm.
right now what investor gonna do? So they're gonna think, oh, how many rides in Thailand? How much is it? And actually like what's the percentage of it will actually become revenue. And when you think about that, it's actually very small. If you think about if you're just gonna do in one country, just day one.
And the problem is with this type of technology, a new entrant can come in that is addressing a market that's 100 times bigger, and therefore they have more money for development costs and all that, and it's very, very hard to compete in that case.
It depends. It depends on the company. If it's like B2B software as a service,
Mm,
yes, like something like Salesforce,
yep.
um, you can expand to another country very easily. But for
Mm,
ride sharing or food delivery, it's not that simple
mm,
because like there are much more than just a platform. You have to be able to work with the guys who deliver food. You have to work with the merchant. It's so local. So usually in that, if you talk about food delivery, in that case, usually the local usually like win.
So, Meili, I used to work in a food delivery business.
Yeah,
When I was
and
18,
coffee.
yes,
But
when I was 18, I delivered pizzas.
oh
And
yeah,
I did it in Ohio, and then we would wait for the customers to call, and then they'd call, and then we'd wait to make the pizzas until we got like 3 or 4 customers called. Then we'd make the
yeah.
pizzas and we'd put them in my car. I'd get out a paper map and I'd like map out my trip of where I'd go next.
Paper map. What's that?
Yes, exactly. And then I would think through, I would do my routing of which way I would go and all that, and I would think it through. And then, of course, I started to learn about how addressing is done in the U.S. North, south, east, west, and even and odd numbers. When I came to Thailand many years ago, I realized that it's not that simple, and so I can see in a ride share or this type of thing, the localization element actually is quite valuable. So that you could build a business that could even be acquired by a global company
Yeah.
because they would appreciate the local knowledge that you've gathered and built into your system.
Definitely. Like think about you have 100,000 delivery men on your
Mm,
platform, and you have to work with them, not including the merchants, like the
yeah,
restaurants.
yep.
It's actually a bit super local business. Yeah,
There's
you're
value
right.
to that. So the next thing I would like to talk about is the concept of, between what you've seen in Silicon Valley, what you've seen in Thailand, what you've seen, in the company. Let's talk about valuation. And I would like to
Hmm.
just kind of think about the realities. You know, how do you, in reality, forget about any theory or anything like that?
Yeah,
How
yeah, yeah.
how should someone look at, or how do you look at valuing a startup company or a venture investment?
Yeah. First of all, there are different stages of startup companies. So people who work in like a seed fund or very early stage funds, they don't they may actually like look at the market, look at the team, the product, and then how much cash the company wants to raise, and then how much ownership that the fund usually needs, maybe like 20-25% with a board seat, and then just back calculate it and get a valuation. It's that simple. But for me, I have what I've done is like usually companies would have a few years of operation before
Mm,
before they come to our round, like Series B or Series C. So there are some numbers that you can do, and usually it's about like the operating model. So when you look into the company, you think about like 3 to 4 things that drive the business. It can be like the number of salespeople, the churn rate of the customers,
mm.
and then you basically look at the history and then project the trend going forward. We
And
try to be conservative, but founders will be very optimistic. So you can debate on the assumptions, like how you gonna, you know, increase your gross profit margin or EBITDA and eventually become
mm,
EBITDA positive in 4 to 5 years, for example.
yep.
And then we look at that operating model, and then we project it usually for 5 years. And
So
then
when you talk about operating model, I think a part
yeah,
of what you're talking about is that when you're looking at the, okay, so the earliest stage is where they have an idea, and you say, okay, I'll put in $1 million and I'll get 10%. Therefore, the company's
Yeah.
worth 10 million, and let's make our best.
Yeah.
The second one, where you're looking at the operating model, it's because the company is actually operating. They may not, sometimes they're not even making revenue. Sometimes, most of the
Hmm.
times, they're definitely not making profit. But let's
Yeah.
just say that they've launched something and they're just barely starting to make some revenue on it. But you
Hmm.
analyze the operating model. Can you value a
Yeah.
business based upon the operating model before they make a profit? Like some people say, oh, well, you got to wait until they make dividend to use a dividend discount model or something like that.
Oh my God, we'll never go to dividend. Usually it's definitely do revenue multiple
Mm,
to value,
yep.
and then maybe at the exit, definitely you would project that the company would be gross profit positive, and then you do gross profit multiple, and also EBITDA multiple. So like
Okay.
three multiples.
Got it.
One
And
thing that's yeah, yeah, yeah.
go ahead.
Oh, one thing that's interesting about this is like sometimes you don't project the cash flow statement that much.
Mm,
You because there's not much, right? You would assume that the long-term liabilities would be zero,
yeah.
because you shouldn't like have like a large debt on your balance sheet. And
Mm,
then just what you want to know about the cash flow statement is that how much runway you're gonna have from the burn rate that you have right now. How long is the life? How long will the company last without
right.
new capital injected into the company?
And the pros and cons of that, if we think about it, what is free cash flow? It's really EBIT, add back some depreciation, and then also looking at, the working capital. And
Yeah.
the pros of the EBIT kind of tells you about the beginning of the cash flow. If you can't get your EBIT to be strong and positive, then the rest of the model kind of falls apart. The other thing
Yeah.
is that when we look at the working capital,
Mm.
I know one of the things that I've seen, the benefit of free cash flow is that many people, they forget about accounts receivables, they forget about
Yeah.
inventory. I remember when we set up Coffee Works 25 years ago, we spent all of our money on the equipment to build the factory, but we forgot about the fact that
You
when we
forgot
called
working capital.
to say, okay, we're ready to buy some coffee, and they're like, how many green beans do you want? We said, I don't know, maybe 100 kilos. And they go, no, 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 you have to buy a ton. And then they
Yeah,
thought,
yeah, yeah.
oh, okay, now that's inventory. And then the second thing we say, okay, we're going to get some accounts payable. But they said, no, you're a new business. You have to buy with cash. And then we realized,
Yeah.
like, okay, in a traditional business, those
Yeah,
working
yeah,
capital accounts, can be really powerful. But in some businesses, startups, they're not that meaningful. So focusing on EBITDA may be the best
yeah.
way to start the whole process.
Yeah, usually we use EBITDA as a proxy for cash.
Mm, yep.
Yeah.
And the other thing I would like to ask about is, like, how does someone figure out what revenue multiple to use?
Oh, right. That's tricky. Because that's tricky, definitely in like a small country that you haven't seen many exits. So in the US, if you do like B2B SaaS or even like consumer applications, there are plenty of multiples you can look at in the market, right? Like
Mm,
just B2B SaaS, I can think of like more than 10. And then you just like do a haircut on the public comps and then use those, and then you adjust it. Like for example, if you look at the companies like in the comps, the growth has been like very fast, but then this company you are valuing doesn't have like as fast growth as the comps. And
mm,
then you also look at the profit margin. Like say if the gross profit of this company, if like you need, you know, if your product is more customized, then basically you have lower gross profit margin, and therefore you should use lower multiple. And so I would think two things. You look at the public comps, and if you have private comps, like if
mm,
you're in a fund that's very large, you would know private transaction comps as
yep.
well. But if you don't, you look at the public comps, and then you do haircuts depending on the first growth, and second is the profitability of the business, and adjust accordingly. Now,
Mm,
for Thailand, of course, we do not have like we haven't had like a sort of exit into the stock exchange of Thailand, you know. And so what do you look at? You look at like the same type of companies, but maybe in Indonesia, for example,
mm.
the countries where um, the purchasing power is kind of similar, you know, and then you just adjust and talk about the assumptions.
And so in the end, what it is this is the aspect of finance that is the art versus the science, where you've got to think about what are the different reasons for, you can't measure it in some number. You've got to think about what is the potential, that type of thing. Or how do you look at that?
I For me, I do think it's all science, which is controversial
Mm,
to many people. I think it's science, but in when something is very new, you don't have enough information to be to make like a super informed decision. Like
mm,
in this case, you just have to um, think critically, and then and then pick the best one that you think would would like say for multiple, it you will be able to exit at that multiple really in the
mm.
future.
Okay. And
Yeah.
my last question about that, and then I've got one other question, is that after all of the experiences and things that you've seen, what do you think is the number one mistake that people make when they value an early stage, startup type of thing? What do you think is, let's say, forget about companies listed in the stock market, but in the area that you're focused in, what would you say is the biggest mistake?
Yeah, I think the biggest mistake is not thinking critically enough about the potential of the business, first in terms of the market, and second in terms of the exit opportunity.
Mm,
um, and then you give value and use a lot of emotions in giving value when you
mm,
see the wow moment, because everything is new technologies. But then like eventually it will come down to like how much revenue, how much profits the company is gonna be able to generate,
yep,
and as an investor, how much really you can sell the company in the next few or several years.
got it. And one other question is about yourself as a young woman. What advice would you give to women in the area of finance, in the area of investing, in the area of, business? What, from your own experiences, any advice?
Yes, I think I'm very big on being passionate about what you do, because like for me, I love my job and I do it on Saturday and Sunday, and that's how I found out that I really like my job. I think I think you should find something that you really like to do, like this, that you would definitely like. You think about it all the time.
Mm,
In my free time, I listen to venture capital podcast. I just don't stop, and I enjoy it. Um, and if you don't do that, people who have passion would just do it much better than you, because they do it 24 hours and 4 days a week. So
mm.
try to talk to yourself, reflect, maybe writing a diary, and then over a period of time, you'll see a pattern of yourself, what you really like to do.
That's awesome. And I would add in from my own experience, given my hairstyle, my experience is a little bit longer than yours. But what I would add is that sometimes we understand what we don't like better than we understand what we do like. In fact,
Mm,
in fact, what I mean is that you may be in a job that you realize you just don't like it or it's not suited for you. And that's a time that it's easier to move away from something you don't like, but you don't always know where is the place you want to go that you like. So therefore, if you're sitting in a job that you think this isn't for me, quit
yeah,
or go
yeah,
find your new passion while you're working in that job. But don't be afraid to let go of something that's not working for you, because there are things that, for me, I was 28 years old when I started my career as an analyst. And I can say
Mm,
I worked, before that in different jobs, and none of them
mm,
really, really excited me the way being a financial analyst did from that day in 1993 until today.
yeah,
Literally every single day, I have lived the passion of a financial analyst. And
yeah.
I didn't have that feeling in my prior jobs. And that's the reason
Mm,
why I quit them. And I didn't quit them because I knew that being an analyst was right for me. I quit them because I knew that those jobs were wrong for me.
yeah.
So I'd add
That's
on.
also helpful. Don't
Yeah.
don't stick to that.
Yeah. Okay. And
Yeah.
last question, is there any routine or habit or something that you do that
Oh,
you'd recommend to help people to be successful?
I do. I do. I started it several months ago and it helps a lot. So I have this app, like a habits tracking app,
Hmm.
and then like I just list like when I wake up in the morning, I have to drink water, eat fruits, meditate. Uh, that's great. And to me, to read the Bible in the morning and
Mm,
then and exercise. And so when you repeat that every day, and then before bed, with write diary. And
mm.
so after you do it for a while, then I can really see how more peaceful I am at work. Like I'm not very stressed at work right now.
Mm, that's great.
If it's not too stressful, but much better, much better. So I think that would be a good, like, try to list the habits and then track it so you can see. One thing that I cannot do well enough is like to drink enough water. Like I drink it in the morning, but
Mm.
I don't drink like more than 1.5 liters a day. That's like, and then I see my own pattern. So I can like design some action to tackle it, how I can drink more water.
That's great advice. What's the name of the app?
Okay, I have to, it's called Habits. It's just called
Okay,
Habits.
okay. Great
Yeah.
advice. I use an app called Habit Share because you can share it with friends so that you see each other completing your habits each day. So,
Oh, that would
but
be good.
yeah,
Yeah.
that one's good. The other thing is be careful also that one of the things I've learned over the years is that actually you don't want to drink too much water.
Oh, really?
Yeah. And
How do you
uh,
know when, like, what's the best
well, I think the first thing is you want to
amount?
drink it, spread out through the day. So you don't want to take in too much. But it's you have to kind of
Okay.
work it out for yourself. But for me, I get this glass bottle. I like drinking water out of glass instead of plastic.
Mm.
And
Yeah.
this says 1.5 liters. So I
Yeah.
fill it up to here every morning. I put it next to me and I just set the goal to try to drink that by, 9 a.m. or something like that. So that's how
I'll
I
do
do
that.
it. That's how I do it. All right.
Thank you.
Great. Well, listen, I just want to thank you for taking the time. There's a lot of value that you shared with everybody, and I know it's going to be extremely helpful. So thanks so much.
Thank you. Thank you, Andrew.
Yep.